Okay, so hello everybody. Today we are back with another Zoom seminar. This time the same topic as last time as on Friday, the small business financing products with you on Cicla from CIBC Bank. The only difference is today, obviously, as I've been talking right now, it will be in English. It will be the same topics covered, however, this time in English. So your moderator for today is me, or again, another time. As shown, my name is Miguel Villafuerte. I'm the marketing and membership coordinator for LEN, as well as I work very closely with the Latino Chamber of Commerce. Um, very similar roles, as well as I'm a student at the UW Milwaukee, or the University of Wisconsin Milwaukee. So just before we start, the both Len and the Chamber, Mas Fuertes as a whole, wants to give a thank you to the Greater Milwaukee Foundation, Milwaukee County COVID-19 Fund, American Family Insurance, Associated Bank, CIBC, and North Shore Bank for the funding and the support they've given us throughout this Mas Fuertes program. So the Latino Chamber of Commerce, just a little bit of information about the two organizations that form Mas Fuertes. Latino Chamber of Commerce, the mission is to foster the economic development of Wisconsin by advocating, strengthening, and promoting the growth and development of Latino and other minority and emerging enterprises with the goals of providing increased access to capital, business opportunities, job creation, and capacity building programs. So if you want more information on the chamber, here are various links, a link to the Facebook page, to the website, to the LinkedIn page, and the YouTube channel for the chamber, as well as a phone call where you could contact the chamber, and an email where you could contact somebody from the chamber. The Latino Entrepreneurial Network of Southeastern Wisconsin, or also known as LEN, is a similar nonprofit organization to the Chamber. The mission is to promote entrepreneur awareness and education through bilingual coaching, professional development, and networking. For some more information on the LEN as well, so there's a few links. I have the link to the website, to the Facebook page, the LinkedIn page, and the Instagram page. You can contact Len at the same number, 414-888-2270, and you can email somebody at len at info@lenwisconsin.org. And so that is all that we have about the two organizations. So, Ivan Cicla, thank you for coming today. Thank you for being here to talk about some financial strategies. So, if you wanted to introduce yourself a little bit, tell us about yourself whenever you're ready.
Thank you, Miguel, and thank you for having me. And welcome everybody back to our CARES Act seminar in English. My name is Ivan Cicla. I am the Community Development Officer for CIBC Bank. Today we'll be talking a little bit about our products, but we're going to be focusing more on credit and what banks are looking for, and what steps you should take in order to apply or and what steps you need to take before considering a loan. So right now we'll go ahead and open our slide, and I can go ahead and show you guys the different requirements that you should be considering before going out and looking for a loan, as well as where to get a loan and what they're going to be looking for. So again, I work for CIBC, and the first and foremost, before you start looking for a loan, any business is going to require to know how much money you need and what you need the financing for. So whether it's buying supplies and inventory while waiting to get paid, paying payroll and rent, buying equipment and fixtures, purchasing a computer or technology upgrades, or buying a business. Could be an existing business, or it could also be the starter capital for a new business. Before you start looking at that, you also have to prioritize those areas where your options are limited to paying in cash and review your alternatives where there may be another way, such as when you're looking to pay for a van for your construction company or delivery car. Um, it's not necessarily, if you don't have to pay for it up front and there's other alternatives such as getting a loan, then maybe we should not buy that vehicle and keep that hard cash on hand, that liquid cash, for something such as rent. Um, And instead of buying, you can also lease one to free up some of that cash flow of your business. Second step we're going to look at is where to get the money. So entrepreneurs have a wide variety of options when it comes to funding. And right below, you can see a list of possible options for small businesses to research and consider regarding lending types. We got banks and credit unions, the SBA loans, microfinance options, crowdfunding, asset based lending, factoring, and online business lending. Now, everybody's familiar with banks and credit unions, the SBA loans. Some of us are not able to qualify for that, and that's okay. That's why there's many options. So when one door closes, there's another one opens, and it's important to make sure that you research all of these options before deciding to move forward with one or the other to make sure that you're getting the best rate and the best type of loan for your business need. That's why it's important to talk to a lender, let them know what you're looking for, and they will give you their what they can do, and you can then take that into consideration while waiting for other um, the response from other types of lending options. All right. So after we look at how much money you need and where to get the money from, so you already know how much you're going to need. Now you know where you're going to get the money from. Now we're going to look at what matters to all lenders. And again, not all lenders are the same, but I'm going to go over the most important things to lenders. So something that most lenders are going to be looking at. Starting with the 5 C's of credit. So they're going to look at your credit and they're going to look at your credit capacity, your character, collateral, capitalization, and conditions. That's one of the ways that they're going to be able to tell if they can give you the loan or not. Credit is broken down into those 5 categories. And going into the first one, capacity is your ability to repay the loan. So the way that they're going to measure capacity is they're going to look at what your monthly fixed expenses are, such as your mortgage or rent, the car note, student loans, credit card debt. And then they're going to look at how you intend to pay the loan back. Is it the income from the business? Is it personal income? Or is it both? And then they're also going to look at other expected loan payments. So, for example, if you have a business generating, say, $10,000 a month, but your mortgage, car notes, student loans, and credit card debt eat up about 8,000 of that, that means you have a capacity of 2,000 to play with. Now, some banks might look at that as being a little over leveraged, so it might be too much for them. That's why it's important to keep your options open and make sure that you don't go with the first one or take the first no for an answer. There's always other banks and other organizations that are willing to do those loans, um, but it's important to make sure that we have the capacity to make sure that we're able to pay that loan back, as well as the banks are also going to do their due diligence and make sure that they feel comfortable loaning out that money. All right. So they're going to do something in order for them to make sure that they feel comfortable loaning out X amount of money, whatever it is that you need. They're going to do something that's called calculate your global cash flow. The way they do this is they add all incomes from business and personal minus personal expenses and debt. The remaining amount should be able to cover the monthly loan payment. But again, if going back to the scenario that I gave out, if your business is generating about $10,000 a month, but 8,000 of that is being utilized for your fixed expenses, then some banks might consider you. They might not give you that loan because they might consider it as being a little over leveraged, as your capacity being just too low because something else happens, you might not be able to pay that back. Such as if we go, if we when we looked at the first slide for capacity, they're looking at the monthly fixed expenses, the ability of how you intend to pay the loan bank, and then other expected loan payments. So when they're talking about other expected loan payments, they're looking at and they're talking about any lines of credit that you may have that are not utilized right now. So, for example, if you have your credit card at zero, but your credit limit is $20,000, they may look at that as being a risk because in the event that something happens, you might be inclined to using that credit card, and now that credit card is another debt that wasn't existent when you applied for the loan, but now is. So some banks may even require you to close down or reduce the lines of credit down to a comfortable level for them. The second C they're going to look at is your creditor character. There's three credit bureaus that banks usually look at: TransUnion, Experience, and Equifax. For small business loans, many lenders will still look at one's personal credit, and your credit scores range between 300 and 850. Items such as bankruptcies, tax liens, judgments, child support, in arrears can be an automatic denials for many lenders. So you may have good credit, but if you file bankruptcy a couple years ago, or you have tax liens, judgments, or you haven't paid your child support, some banks may automatically decline your loan, even if you have the cash flow, the global cash flow to support it and the credit. So it's important to make sure that you always take care of uh, all your judgments, tax liens, and that you are very wary and you when filing bankruptcy. Because as we can see here, they're going to be looking at that, and that's something that they're really going to be looking at, especially in the coming times with the whole COVID. A lot of lenders are starting to become a little more strict with how they're lending out their money. So continuing with the credit and character, it's important. Credit and character is important not just for credit, not just for loans. It's also utilized when renting an apartment, for when applying for certain jobs, and for insurance. Many factors contributing to your credit score are your past payment history, credit usage rate ratio, credit length, inquiries, and types. And it's broken down into percentages. So 35% of your overall credit score is going to be based on your past payment history. 30% of your credit score is going to be based on credit usage. And 15% is going to be based on credit length. And 10% is going to be on your inquiries and 10% on types of credit. So when we look at the first one, past payment history, they're going to be looking at were you ever late 30 days, 60 days, 90 days, or more. That's why it's very important that we make sure to make our payments on time or before the due date. As we can see here, that makes up 35% is the strongest one. So if you're good there, 35% of your score is in good shape. When we look at the credit usage ratio, they're talking about how much of your overall credit you're using. So for example, if you have a credit card of $1,000 with $1,000 limit and you utilize $100, that's a 10% usage, and that's okay. A lot of people recommend to use less than half, and if you're more conservative, 30% or less. Meaning that if you have $1,000 credit card, you should never go over 500, or if you want to play it safe, over $300. And then after that, you start paying it down to make sure that you don't carry a balance month over month. Your credit length is also going to play a 15% role in your credit score. So a credit card that you take out this year is going to impact your credit score um, negatively just because of the length of time rather than a credit card that you opened 10 years ago. And they're going to look at your average credit length. So if you have a credit card, if you have 5 credit cards one that you opened 10 years ago, and all the other four you opened within the last 2 years, and you close the one that you opened 10 years ago, that credit history is going to go away. The length of time is going to go away. So now you're stuck with four credit cards that to the credit bureaus or in your credit report is reporting as only being open for 2 years. Now they can go back and see it in the history. Yes, it's a closed account, but your credit score is based off of credit length, an overall credit length. Your inquiries are also play a good role. That's why it's important that when we apply only when we know that we're gonna get approved or when we know that we need it. So it's very important not to just go out to every single store and start applying for the Walmart card, the Cool Cash, the Target credit card, and make sure that you're only applying it to when you actually need it. The way that we like to explain it is if you come to me and you're asking for a loan and the bank sees that you have applied at five other banks, we may look at an underwriter may look at you as a desperate person or somebody in really in dire need of the loan of the money. So make sure that you only apply when you actually need to apply. And then the types of credit: there's mortgages, there's car loans, credit cards, and in Wisconsin we have We Energies, who also reports to the credit bureau. So it's very important to make sure that you pay that one as well on time. Also, it's very important to make sure that you have different types of credit all in once. What I mean by that is making sure that you have all your credit types are not all credit cards. Make sure that you have, if possible, a mortgage, a credit card, the We Energies, and maybe a car loan, because that's going to play 10% of your rolls. May not be a lot, but it adds up. The fourth C is going to be the collateral. So collateral is the business and or personal assets pledged to help secure the loan. The common types of collateral are equity in your home, account receivable, inventory of the business, and equipment. So lenders are going to go through an evaluation of the collateral to determine how much they can lend. So what they mean by that is they're going to be looking at how much is whatever I'm financing worth. In the event of purchasing a commercial building for your business, they're going to look and get an appraiser out there, and they're going to get an appraisal on the building to make sure that the building is worth whatever it is you're paying for. And lenders have different loan to value ratios that they're comfortable lending. What that means is that if a bank has an 80% loan to value ratio, they will only loan or feel comfortable lending up to 80% of the value of the building, leaving you with needing to put in 20, or in the case, let's say you're buying a building for $100,000 and the building comes back appraised at $120,000, and you're buying it for 100. If you're putting 20%, then you're well below that 80%. They're willing to loan that. If you're buying a building for $100,000 and the building comes back appraised at only 80,000, the bank's not going to want to loan exactly 100,000. They're going to want to make sure that you come down to 80% of 80,000, not 100,000. So they may ask you to put more money down or renegotiate the deal, or simply flat out say no, loans decline, and you would have to go to a different lender that could possibly go a little higher than the current lender that you were working with. They're also going to look at your inventory, whatever you have on the business, such as your vehicles, your your tools, and any other type of valuables that are in the business. And they will put most of the time, if not all the time, they will put a lien on the business, meaning that in the event that you can't repay the loan, they will repossess the property, inventory, or vehicles and sell them to make some of the money back that you were unable to pay. So it's very important that when doing so, you do know that you are agreeing to put that as collateral if they are asking for it. And capitalization is the amount of money the owner personally invests into the company. So lenders are usually more willing to lend to someone who has invested some of their own money into the business. And there's no precise measure or amount of enough capital. It's specific to each deal. So what this means is, again, if we're buying a building for $100,000, the bank will not finance 100% of that, meaning they're not going to give you $100,000 even so you can go buy the building. They are going to require you to put what's known as a down payment. In this case, your capital. That will be your capital, how much money you're bringing into the deal to make sure that you are invested into the building or the business. Banks will not never will almost never do 100% deals, with 20% being the, I think, the industry standard. They may be higher. I've seen them as high as 50% down to purchase a building, just because of the nature of the business being a little bit more riskier than other businesses. But it all depends, like it says here, it's specific to each deal. And it may change at any time. And again, with the pandemic going on, I see that I see it happening that banks may start requiring even more capital being invested at time of purchase. And then we got our conditions. So our conditions are internal factors inside the business, such as your loan proceeds, working capital versus the equipment versus inventory versus renovations. External factors are outside of the business. So that's economic factors, environmental, legislative, and industrial. They're also going to look at, will a certain law affect the business industry? Is the industry growing or diminishing? What's the competitive landscape of your industry? So right now we're living in the pandemic times. So right now is a time where a lot of businesses are being affected, and those in retail and restaurants and bars uh, are some of the hardest hit by the pandemic. Such as, if we look at the second bullet point, will a certain law affect the business's industry? Well, with the whole restriction of not being able to operate at 100% capacity, that's something that they're also going to be looking at. Will the restaurant or bar be able to operate? Is the industry growing or diminishing? Well, as we all know, restaurants are diminishing. It is diminishing, but I do see a lot of them coming back or new ones coming up. And these are just factors. These are just factors that after they go through your credit, your collateral, your your capitalization, character, and everything, they're going to look at these factors and decide whether or not they're able to give you that loan. And again, these external factors, they're a little harder to control since they're out of your reach. You can't control the economy by yourself. You can't control environmental, legislative, or industrial. Your loan proceeds, working capital, equipment inventory, and renovations are a little bit easier for you to control. You have a little more control over that. But again, it's all depends on the type of bank. Some banks will lend more to multifamily unit projects. Some banks will loan more to restaurants. Some banks may loan more towards it's certain niches that they're looking for. Some banks may loan more towards construction companies. That's why it's very important to make sure that we do our research and we don't go with the very first one. Make sure that we get different offers, essentially. and work with different lenders to make sure that we go with the right one every time. All right. And then just going to pause it here real quick. Do we have any questions at all?
I didn't. I don't see any questions. However, I had one question that did pop up. As you said earlier, that inquiries were, I think they were about 10%,
Yeah.
and how you said to not to just apply to everybody or to every bank and everything. I wanted to ask because me being a younger, college student, I actually started applying to a few credit cards recently, and I have been rejected by one already. So I wanted to know how much would that affect me, knowing that's 10%. And I want to know, maybe it was took into account because I was younger, because it was maybe when I had no credit at all.
Well, it's not necessarily going to affect you since you're younger and you're just starting your credit history. Essentially, you may not have credit, right? So you don't have credit. So there's really not much to affect there at this point. But you also want to make sure that maybe you start with a secure credit card rather than a regular credit card. Those are a little easier to obtain, and they will report to the credit bureaus. So that's going to ramp up your credit score a little bit. Um, as well as if you applied for it 2 years ago, odds are it's already out of your credit history, so it's like you never applied. Though I think the hardest thing that I've seen that affects a lot of younger people is when they go out for a car loan, they apply with the dealership, who then goes and applies on behalf of them with 10 different banks, each one running their own credit inquiry. So now you have 10 hard hits on your credit, and that is going to negatively impact your credit.
All right, thank you for that. Yeah, so we don't have any other questions, so if we wanted, we could continue.
All right. So how do we get started? So securing a loan begins by knowing what your lender requires. So for a business loan, a lender is typically going to require the following: business financial statements, business tax returns, business plan with budget or projection, personal financial statements, and personal tax returns. So right once we know how much we're going to borrow, we know where we're going to get it from, and we're sure that we're going to be able to go with a certain lender, we have to make sure that we start gathering all these different documents that the lender is going to ask you at one point or the other, and it's better to give it to them up front in the beginning with the application. That way, it'll just make the process a lot smoother and faster for you to close on that loan. You also got to be ready to answer questions about your business and be prepared to tell lenders why you need the money and to be as precise as possible. So if you're going to use it for remodeling, make sure you include that in your business plan. If you're and then go as far as including it in your business plan and letting that and add in why it's necessary or why it's gonna help the business grow. All right. Now, a lot of businesses are looking to start up, and they're not as they haven't been around as long as some other businesses. So when we're looking at startups, we want to approach them a little different. With CIBC, we partner with organizations in Chicago, St. Louis, Detroit, and Milwaukee to support entrepreneur training programs to give startup and early stage small businesses important skills, resources, and products to help them succeed. And any eligible graduates of these programs are encouraged to apply for financing with CIBC. So when you take these program, it's called an entrepreneur loan training program with our partner organizations. They are able to give you the important skills and resources the that will help you grow your business and take it to the next level. So you might be able to give you they'll give you the back end of things. So you might be able to start your drywall business. You might know how to install the drywall, but you might not be able to know how to run the books or the accounting. And this is a great way to start to learn the business, to learn how business operates, and as well as you'll be able to take advantage of any other resources that they offer to maybe help you get the licensing, make sure that you have the proper licenses, that you know how to price yourself, and that you know how the business operates on the back end. And once you graduate with this program, you have a certificate. You're able to apply with CIBC for a startup loan of up to $10,000, as long as your personal credit and your personal income supports the $10,000 loan. Now we're willing to work with anybody as low as 600 credit score for some of our loans. But even if you have a lower credit score, you can always reach out. We have other types of loans that we can offer to help you improve your credit, as well as we may be able to give you some guidance as to how to repair your credit or increase your credit. So we do offer, like, our entrepreneur loan program was created to support startup or early stage small businesses with important working capital, with lines of credit and term loans up to 10,000 and up to 30,000 for early stage businesses. What that is businesses that are over, they haven't been in business for over a year. And then if you want to go to the next one, our Easy Path business financing is designed for small business owners with options to help achieve their business goals. So it's growing your business. So you're already in business. You just got to get to the next level. This is the type of loan that best works for you. If you want to go for the next one, is our term loan. This we typically give up to $25,000, and it's for people with at least 600 or above. Now we're looking at a fixed rate of 5.99, and personal guarantee is required. So what that means is that in the event that the business cannot pay for the loan, you will be responsible for the payment of that loan. And then we also have our Easy Path revolving line of credit, and funds are drawn as needed. Again, variable rate, it's prime plus 4% and no fees for 600 credit score or above. Personal guarantee is required, and the line of credit is up to $25,000. So this is good for the type of businesses that are looking for perhaps a loan, but they're not ready to utilize all of the money right away. Maybe they're looking at a renovation, and they know the renovation is probably going to cost about $15,000 to $20,000. Then we start them up with a line of credit. They could potentially go out and start the renovations, the remodeling, and draw as needed to make sure that they're not paying as much interest on the loan when you look at, um, and then they're only utilizing whatever they need. And we have our Easy Path step loans. So this is used to improve a company's financial credit standing. So loan proceeds are placed into an interest-bearing certificate of deposit, also known as a CD. Small business owners make monthly payments until the loan is repaid. Then the CD plus interest earned becomes theirs. And they range between in the amounts of 500 to up to 10,000. The terms go from 12 to 36 months with a fixed rate of 5% and no origination fees. Proceeds are placed in a CD account that matches the loan term. So they need to prove sufficient income to make loan payments. Loan is always 100% collateralized and no FICO requirement. So this is designed for the people that have um, little to no credit, or that they have a low credit score. This is improved to improve that company's financial credit standing. You're able to prove to the bank that you're able to pay a loan. Essentially, it's a form of a secured loan. And our most famous program would be our Community Plus loan. So the Community Plus loan targets neighborhoods, businesses that have passed that criteria, the critical first year of business. And we're looking at businesses that have been in business for over a year, and the financing is typically below market rate. So gross revenues of the business must be below $1 million. We offer term loans and lines of credit. The term loans are between 1 and 5 years at a fixed rate of 6 or 7 with no fees. Lines of credit are for 1 year term, and they're variable prime or +2 and no fees with a minimum credit score of 660. And again, a personal guarantee is required. Right. And then so also we offer loans of up to 15,000 for qualified business owners along commercial corridors in special service areas. So only special service areas that designated by CIBC will be considered, and loans must be used to improve for improvements or general maintenance of the building, such as repair, replace signage, windows, doors, exterior lighting, perform brick cleaning and tuck pointing, restore original architectural features, or paint the building exterior. And then I think with that one, let me go. We're gonna go ahead and end there on that one. It goes into our business overdraft, but that you would have to be one of our existing clients. So real quick before we go to that one, if you could just go to the one right before that one. So just quick disclosures. All of our loans are subject to credit approval. Personal guarantee required for all smart business loans and lines of credit and Community Plus loans. Terms and conditions apply. Easy Path Business Loan Program is limited to businesses located in a low or moderate income census tract in the following counties: for Wisconsin, Milwaukee and Waukesha counties; Illinois, Cook, DuPage, uh, Grundy, Kane, Lake, and Will counties; and we have Michigan, Macomb, Oakland, and Wayne; Missouri, St. Louis City, and St. Louis County. And with that, I'll say thank you for listening to me today. And here is my contact information. Feel free to reach out to me if you have any questions, concerns, or if you just want to browse our products or get more information on how CIBC can help your business grow. Or if you're looking for just tips or advice, feel free to shoot me an email or give me a call at any time.
Well, thank you very much for your time for this presentation, Ivan. Uh, as on the screen, for anyone that is interested in some of these programs or some of these loans that CIBC offer, you can always contact Ivan at either that email or that phone. Also, you could contact us either at Len or the Chamber, as we work very closely with CIBC and Ivan. So do not hesitate to reach out to any of us. I know that in this time of COVID, the business owners and a lot of people have been struggling a lot, and loans have helped out a lot of business owners, a lot of people in different ways, as well as those programs that Ivan had mentioned. Like you said, maybe you have a really good drywall company, but you don't know any of the financial parts. In my short time working at Len in the Chamber, I've met a lot of business owners like that, who they know how to really run their business well, but they don't know how to do some of the financial stuff. And so, if you're interested, Ivan Cicla is here. You can always contact us here at the Chamber at Len, and we will always get you connected with somebody. So thank you again for your time, Ivan. It was much appreciated.
Well, thank you, Miguel, for having me. And then one last thing that I forgot to mention is CIBC is probably one of the only banks that I know of that we do work with I-10 holders. So we don't necessarily only work with Social Security. We will work with I-10 holders as well.
That's great. Another just uh much broader for anyone who is an I-10 who does get rejected by other banks. There's an opportunity with CIBC. So continue their programs of these financial seminars. On this Friday, we will be having a presentation from Alfredo Martin. It will also be in Spanish again at 12 p.m., similarly to how we did this past Friday with Ivan, as well as we will be having a version on Tuesday in English at 6 p.m. Thank you very much, everyone, and have a great rest of your night.